Good evening, guys. It is Monday, March 24th, 2025. This Bathrobe business. I'm George Yoganov. I've been gone for almost 2 weeks, but I'm back. I got coffee and I got news. Yeah, this is the first video I've uploaded since it was the 6th, which isn't surprising because this is Monday through Thursday now. But all the week of the 10th and the 17th, I could not upload between some family emergencies and work emergencies. There just literally wasn't enough time in the day. I would leave for work at like 7 in the morning and then come back at like 9:30, 10 sometimes. So it's been a difficult 2 weeks, but got through it and hopefully better blue skies ahead. So I'm going to be reporting on a lot of the major stories. I was still following the news during my hiatus. And there's a number of major stories I want to talk about. I'm not even going to talk too much today about the major stories of the day outside of one, but I kind of want to talk about a couple of major stories that came around while I was gone because I feel like they have greater market repercussions. So the first one I'll talk about is actually today's story. So Trump announced a major deal with Hyundai. So this one is interesting because let me blow up the screen. So Hyundai steel plant leads 21 billion U.S. investment as tariff looms. So essentially, Hyundai is planning to build a massive steel facility here in Louisiana. It's going to be approximately 1,300 jobs. It's going to be 9 billion to expand U.S. automobile production to 1.2 million units annually, 6 billion to expand U.S. supply chains for steel and auto components, including batteries and packs for electric vehicles, and then 6 billion for technological innovations, including autonomous vehicles, robotics, artificial intelligence, and electric air taxis. That one's going to be interesting because that actually ties into another one of the stories of today. So this is a major development. Oh, and I'm sorry, not 1,300, 14,000 jobs. I was totally off. I know I saw that 1,300 somewhere, but yes, creating approximately 14,000 jobs. Here it is. This is where I saw it. In Louisiana, they'll create approximately 1,300 jobs and employ more than 4,000 in related supply chains, according to Representative Troy A. Carter, Democrat of Louisiana. So it's across the United States that they're making these investments. So overall, across the United States, you're going to see about 14,000 gain in jobs. That's going to be a mixture of both direct and indirect hiring. A lot of the support structure, et cetera. You open a new plant, there's going to be people that want to eat in that area. Restaurants start opening up, et cetera. So this is more of an estimated number, but it is a major investment. So why this story is doubly interesting, aside from the actual investment. So one of Trump's greatest issues is he's not really much of a planner, right? And he himself would probably say he goes from his gut. He probably would say he is a planner, but he's very much goes from the gut, very gut instinct, very much a creature of instinct. He's not a person that sits down and does deep analysis and deep planning. And one of the problems with the tariffs was a lot of people were complaining there isn't industrial policy to match. So it's okay, great, you're passing all these tariffs on foreign countries. You're stopping products from coming in, but where's the industrial policy that's going to manufacture it here? Because you can't just say that it's going to happen. It takes more than just making a statement on Twitter to actually get industry moving into the United States. But here we are. So this is, I think, one of his better maneuvers. This is actually a project that will create jobs and will create industry here in the United States. Now, he's got to still do that across multiple sectors for multiple companies, multiple entities, but it's definitely a step in the right direction. I think it should be highlighted. So while I was gone, sorry, there you go, got to crack it. So while I was gone, something amazing happened. Gold skyrocketed. Gold went up above 3,000. That's not a surprise. If you watch this channel, you knew I said that was going to happen before the end of the end of the first quarter, which it did. It happened sometime in I think the mid March period while I was out. But this is a major milestone. This just goes to show you how strong inflation is and how much instability exists in the market. We also reported, if you'll remember, just a couple of weeks ago, how there's actually a global supply shortage of gold. So it's not just here in the United States that gold is skyrocketing relative to the US dollar. It's around the world. It's becoming more and more of a safe haven currency. So there's a lot of countries that are jumping into it. In Korea alone, they're literally running out of gold. They can't mint it fast enough. So definitely concerning. Now, to parallel that with Bitcoin, during that same time, Bitcoin has been plummeting. Bitcoin is showing more and more that it's very much a product of the financial sector. It goes up when the financial markets go up, and it comes down when the financial markets come down. And when the markets were crashing, so did Bitcoin. I believe at one point it hit about 77,000. Yeah, 70,396 looks to be the low in the last couple of weeks. It's definitely the lowest it's been even pre-Trump election. It's back up. Obviously, it's at 86,971, but Bitcoin was plummeting. I do not think it is the safe haven that a lot of people think that it is. Similarly, during that time, we had a very bad jobs report. So U.S. payroll growth totaled only 151,000. That's less than was anticipated. It was about the 170,000 was the market consensus. So we came in about 20,000 under that. Overall, government payrolls were down. No, I shouldn't say government payrolls were down. Government payrolls were technically up, but government hiring was down. Not a very strong job report, and now it's affecting multiple sectors, including hospitality and leisure, which if you watch this channel, I talk about all the time how that must be the sector that we watch. So Delta Airlines slashes earnings outlooks on a weaker U.S. demand, sending shares lower. This was on the 10th of March, and they slashed their market forecast from a growth of about 6 to 8% to a growth of only 5% because they're already seeing a slower growth in bookings this year. Hospitality and leisure is one of those you really need to watch because if this is dropping, that means people don't have disposable income or are worried about the availability of their income in the near months. So this is a very powerful metric. This does not bode well for the U.S. economy. It's still very much on shaky grounds. Remember, the only thing that was really propping up the U.S. economy for the longest time, the NASDAQ, the Dow Jones, Wall Street itself, was AI. And that hasn't really improved since the announcements of DeepSeek. NVIDIA's kind of rebounded a little bit. A lot of these companies have kind of lifted themselves up. But overall, the market sentiment is very much I shouldn't say anti-AI, but it doesn't have this blue ocean strategy of, oh, now that we have AI, we could do anything. It's much more of a restricted market sentiment, and it's much more of a worrying market sentiment across the board. Also, while we were gone, while I was gone, we had terrible reports from retailers to exporting goods. Kohl's, Joann's is filing for bankruptcy. We had issues with Tesla plummeting drastically. So we've got multiple sectors where we're feeling a real recessionary headwind up ahead. Now, with some of these like Tesla, I think this has been happening for a while. I think it's been propped up very much by a PR campaign from Elon Musk. But nonetheless, it's multiple sectors being affected by this. Another story I want to talk about is Southwest Airlines. So Southwest will now begin charging bag fees, and for the first time, it will have actual numbered seats in different classes. So this story seems interesting simply from the fact that it's literally changing the foundation of the company. But there's something else happening here as well. And it's something that's kind of been creeping into the market and kind of been talked about in the market, but I haven't really featured it on this channel because I haven't really known how to structure the argument. But what I want to talk about in relation to this article, and I just noticed my screen was not sharing. So what I want to talk to you guys about in regards to this article is that this is really an issue with private equity. So I've been talking to you guys a lot about private equity in regards to like Macy's. What else did we talk about? I know we've talked about Arc House Finance. We've talked about major private equity firms multiple times on this channel. But what something is starting to bubble up is a little bit of instability in the private equity market. So Joann's has filed for bankruptcy. Now, Joann's is technically, their stores are still profitable. And you might think, well, what's the big deal? It's just a craft store. Yeah, it's just a craft store. But systematically, we're seeing more and more issues coming out of private equity where they're going back to kind of their traditional roots of tearing companies apart and just scrapping them from whatever they can take. It's becoming very much a scavenger mindset. It's happening with Joann's. It's happened with other businesses. It happened originally with Sears. They were one of the first victims of this kind of structure. It almost happened with Macy's. They barely avoided it. And now it's coming for Southwest Airlines. There's also talks that it's going to be coming from Michaels. And there was another major retailer. It was the one that owned all of those skateboarding companies like Valcom and you're testing my middle school knowledge here. I don't remember all of the skater guys' brands, but there was a company that went bankrupt just at the end of last year that was part of that conglomerate, that private equity group, where they just pretty much liquidated everything and shut it down. And I think Southwest might end up being the next victim. What's interesting here is Southwest is one of the stronger businesses in this kind of sector, but it's not the first time that private equity has toppled a giant. And if you're talking about an airline industry that's already starting to see headwinds, no pun intended, you could see Southwest having major issues with this private equity firm in the future, especially now that there's more low cost alternatives, which Southwest originally was. Southwest was supposed to be the money saving option for a lot of families. But now there's Frontier, there's Spirit, there's a lot of discount airlines that are kind of filling that niche. And not that those airlines are as good as Southwest, but the problem is if you're trying to, cut dollars, especially in a market like we have today, it might be a very tempting alternative. So I think that Southwest could very much end up being a victim of this private equity wave that's coming, where we're in this scavenger mindset. Also, what the other problem with private equity is money isn't as cheap as it used to be. The cost of borrowing is increasing. Especially when you consider that the Fed came out last week and said that they are not going to be cutting rates yet. A lot of these private equity firms are becoming much more aggressive and much more savage. So definitely keep an eye on this sector. Anything that's private equity, I feel like can become a real problem here in the next quarter. I think we're coming to the end of the first quarter now. We're seeing that a lot of these numbers are kind of becoming baked in. More and more, we're going to see the possibility of a recession bubbling up. I think that picture is going to come more into play in the second quarter. And I think you're going to see a lot of the moves that these private equity firms do are going to become a much more aggressive and much more savage towards American businesses. Last story. Last story I want to talk about, this one relates to us here in the state of Utah. So this is pretty cool. I actually had the idea for this kind of business a number of years ago, but who's going to listen to me? This is the article reads, "It's a bird, it's a plane, it's the future of air transit in the Beehive State." So there's a company called 47G. It builds these small all-electric planes that are made for either 5 people or transport of cargo across short distances of roughly 150 miles or less. There's talks that they could expand to up to 250 miles, but so far that's kind of where they're doing their testing. So this is kind of preliminary test. There is some cargo being moved back and forth here. Primarily, currently, it's between Salt Lake and Logan. But this is actually a very cool idea, because if you could get a number of these planes into the air, you would have small modular planes that can move people of 5, 10, 15 people at a time, potentially with multiple of these planes going, and cut congestion down exponentially, especially if we can create a system where you don't have to have the rigors of security, of TSA, et cetera, which I know a lot of people can say will be a liability, but I think can greatly increase the number of people moving in between smaller cities here in the Beehive State. So these things can move between Logan and Salt Lake in about 20 minutes. So for those that don't know that area or that commute very well, that usually takes about 2 hours or so, maybe closer to an hour and a half if you're hitting nothing but green lights and good traffic. But usually you're looking at about an hour and a half to 2 doing that commute, and you can do it in 20. If you could have multiple of these planes moving every hour, 3 every hour, you could be moving 15, 20 people at a time. It would definitely improve flow. It would definitely improve commerce in these areas. And I think this is a very, very smart idea. Obviously, price point is going to come into play, but I think this is a fantastic business. And I think it's going to be great if this actually does get going in the state of Utah, especially with some of the smaller states. You can connect north and south much better than it's currently connected. And I think you would see massive economic gains if this actually went into effect full steam ahead. So that's pretty much it. Those are the stories of the day. I will see you guys back here tomorrow. Hopefully no more hiatuses. Actually, no, I will not be back tomorrow. I have another family thing. So I'll be back here on Wednesday. So I hope you guys have a productive Tuesday, and I'll see you guys Wednesday night. Thanks. Bye.